Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum and Bitcoin risk with the help of 20-week moving average, as well as create forecasts for Bitcoin and ETH based on our machine learning analysis. None of the content is financial advice. Let's get started. Over the last few weeks, essentially since early December, the price of crypto markets are in a free fall. So what helps identify a good DCA opportunity or any dip buying zone is identify the risk and the reward at any given point in time. So this analysis available on cryptoweeklies.com under the SMA risk section. The link is on the bottom of your screen. This is a free website for all. This particular analysis helps for Ethereum to identify what is the current risk at any given point in time. Back in early December, the risk was at around 63%. Today, the risk that is on as of yesterday, that is on March 10th, is the risk is at around 15%. So if you look at it from a broader market sense perspective, the risks are color coded from darkest green to dark red, from in increments of 20% to identify what are some of the best buy zones for any asset. So particularly whenever the price falls in this lowest risk regimen, that's where the price has gone too far down from the 20-week moving average, identifying potential for any mean reversion or any lower valuation accumulation. So not just for Ethereum but also for Bitcoin, both of them are less than at around less than 20% risk. Bitcoin is slightly higher in terms of the risk with respect to its 20-week moving average. That is because Bitcoin has held better in this drawdown phase than ETH. So you can also see that even in the rallying stages, the risk associated with Bitcoin was higher than with respect to ETH. That is because Bitcoin did rally a lot more this bull run than Ether, especially over its 20-week moving average. So another way to look at what is the overall market looking is under this peak valley indicator that we have on the website, which helps identify what is the current risk in the entire market, not just for Bitcoin and ETH, but for the entire market. Right now the risk levels are at around 27%. That is also coincides with the bull market completion based analysis. So for example, in the last bull run, that is in 2021, May of 2021, this indicator said that the bull run was 100% complete, although there was a secondary leg back in November time period, because Bitcoin did not go much higher than its 64k peak in 2021 May and only 69k in 2021 November. The risk levels were peaked at around 85%. So this time around, in December, early December of 2024, risk levels did go higher than 60%. Now they are back in this low risk regimen between 20% and 40% risk, color coded by this green color in the low risk regimen, coming at around 24%. If the risk were to fall by 4% or so, they would fall under this blue color, where historically speaking, that's the when the market has cooled off the most, and it's in the lowest risk regimen. The last print that we had was back in early November of 2024, just after the election results, or during the election results. And since then the market did rally quite a bit, and after taking a rally from this low risk, that is less than 20% risk, to more than 60% risk, the market did have a cool off period since early December. Now it's kind of in a free fall. The next level to look at is if the 20% risk gets held. That means in terms of a drawdown, the drawdown is again closer to 4 to 5% from here. Then again this green color or the second low risk could be held as support. If not, then we might visit this blue color or the ultimate low risk or lowest risk in the market. In terms of the social sentiment, again there are a lot of bearish narratives in over the last 24 hours. This is available under the crypto TLDR machine learning based news summarizer. Again, most of the narrative is related to Bitcoin are again either either bearish or neutral. Neutral is yellow. There are few bullish narratives again, such as USD and USDC adoption, as well as crypto summit related discussions. Again, there are some false positives also, but overall the sentiment is bleak at this point in time. Again, there are over the last 7 days or so, if you look at the narrative word cloud over here under this analysis, you would find that the size of the bearish narratives is keeping on increasing, although the wider sentiment is still bullish over the platforms such as YouTube and X related to crypto. That is, the narrative that we had most going for was the strategic Bitcoin reserves related narrative. Again, since that, again, the size of Bitcoin as on this narrative cloud helps identify that the market is still looking more towards Bitcoin. Again, the meme coin narrative has died down quite a bit. Altcoins are not in discussion apart from the major altcoins such as Ethereum, Solana, and again Hedera. Again, as altcoins on their own, also XRP and Cardano over here. You can see Hedera over here. Altcoins as a narrative compared to Bitcoin has quite died down in terms of the social media discussions. So all in all, again, if we go back to Bitcoin and Ether to check their own USD forecast per hour machine learning based model, the likely the continuation of the downturn or the downtrend, if it continues for, let's say, one more month, the bottom for Bitcoin in that environment could be at around 70k, slightly lower than 70k. If the downturn continues for 2 to 3 more months, then we might visit 65k per this machine learning based model. Again, this is trend on Bitcoin's price action since 2014, about 10 years worth of weekly price action data. The base case still is for Bitcoin is this pink line, which says that if all things are equal, the likelihood that Bitcoin's price action goes higher with time is higher than goes lower with time. If there is a recovery in the market, the levels to watch for the next 2 to 3 months are between 85k to about 110k for Bitcoin. In terms of ETH, the USD case for ETH, that is all things equal, again similar story, again not as bullish apparent as Bitcoin. Again, the base case between 2085 to about 2200, so about a $200 increment over a span of 6 months is the base case. Again, that is all things equal. If the market trends neutral, then the price of Ether could go slightly higher with time. If on the other hand the market does have a downturn for, let's say, one and a half month, the price of Ether could be at around $1,600. If it stays bearish till about end of May, the price of Ether could be at around $1,500. On the other hand, if the market does recover, the one standard deviation bull case for Ether is between per this machine learning model, again none of the content financial advice, between $2,200 till about 3k towards the end of May per this model. Again, if you are interested in tabular view, they are also available at the bottom of your screen for Bitcoin and Ether. So with this, I'd like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and check out cryptoweeklies.com for any additional analytics, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.